All right, well, let's go ahead and get started. First of all, welcome everybody to this fifth in our series of Suptech broadcasts. For those of you that I've not previously met, I'm Philip Straley, I'm FNA's president. And before we jump in, I'd like to thank all of the attendees for joining us and supporting these broadcasts and the communities that surround them. We view these types of industry events as very critical for cross-sector dialogue and cross-fertilization of knowledge. We now have 4 broadcast series. So we have this Suptech broadcast series. We also have long-standing broadcast series for central bank digital currency topics and for financial market infrastructure, FMI topics. And then tomorrow, we're actually starting the 4th series of broadcasts, which is around treasury and liquidity management issues for global banks. Now, I'm going to share my screen briefly now. Excellent, much more reliable than myself. So the program for today, over the next 60 minutes, we're going to do a very brief introduction for those of you that are not familiar with FNA's work. We'll keep that to just a couple of minutes max. We'll then spend the vast majority of the time today on our roundtable discussion. We have 2 guests today, who I'll introduce in more detail in a moment, but they're Arthur Yuen, Deputy Chief Executive of the Hong Kong Monetary Authority, who is well known to many of you. And then rare in our broadcast series, we actually have an FNA guest. Generally, they're all external. We have Dr. Kimmo Soramäki, who is FNA's founder and CEO. I'll give more full introductions to both Arthur and Kimmo in a moment. We'll spend about 40 minutes on an open discussion with myself as the moderator and Arthur and Kimmo. And then for the last 15 minutes or so, we'll cut over into open Q&A. Given the number of people on the session, we generally get pretty large numbers of attendees, and we have a good group today. I could see we don't allow live open questioning because it gets a bit chaotic with people unmuting themselves, et cetera. And so we would ask that you ask questions purely by the Q&A tool. You can see the Q&A tool down at the bottom of the Zoom bar. You're welcome to ask questions throughout the session. When we cut over into the Q&A, we will then be able to, all of the speakers, and we'll be able to see the questions and we'll be able to take those one by one. And we do very much encourage an open dialogue towards the end. Now, just very quickly, for those of you that are not familiar with FNA, FNA is an analytics software company based in London. We specialize in network analytics and simulation, and we operate across 4 primary industry sectors. The first and the original sector being central banks, where we're very active. The second being financial market infrastructures, and in particular, payment systems. The third being large commercial banks, specifically global systemically important banks that we're very active with. And the fourth being the national security and intelligence sector. Now, Suptech specifically, we are, we're very active in bringing a variety of network analytics and simulation capabilities to our Suptech clients around the world. We are lucky to work with some of what we view as the most innovative central banks in the world around Suptech. We view Hong Kong Monetary Authority certainly in that category. They've been investing heavily into Suptech over the last half dozen or so years. Now, if we look at the solutions that we deploy, we both deploy our platform as a whole. So many central banks utilize FNA's platform for building their own applications, but we also have a number of out-of-the-box Suptech solutions for instance, loan data analytics, where we deploy analytics on top of granular loan data sets, RTGS stress testing, which is a very hot topic right now, given some of the market dislocations over the last month or 6 weeks, and payments behavior monitoring, which we view as a very, very innovative solution, where payments data sets are used for non-traditional supervisory purposes to provide real-time alerts around, for instance, liquidity and solvency issues of banks. So I'm going to keep the F&A intro to that, and I'd like to now briefly introduce both Arthur and Kimmo a bit more fully. So Arthur has been in the regulatory world for about 30 years, was in the Hong Kong government. Prior to that, Arthur is the Deputy Chief Executive responsible for all banking sector issues across Hong Kong. So that includes banking policy, banking supervision, conduct-related issues, as well as in enforcement. And he has had a nearly 30-year career with the HKMA across many parts of the HKMA. So welcome, Arthur, today. Thanks very much for being with us this morning here in London and this afternoon in Hong Kong. The second guest today, as I said, is it's rare that we have an F&Aer with us as a guest, as in addition to a moderator for the discussion, is Dr. Kimmo Soramäki. Kimmo was the founder of F&A going back about 10 years, and prior to that had been a longtime central banker, starting first with the Bank of Finland, where he built the world's first payment system simulator, which is still in use in many central banks and countries around the world. Kimmo then moved on to the ECB, to the New York Federal Reserve, and then later to Bank of England before founding F&A. And Kimmo is a pioneer in applying network analytics in the financial sector. So welcome, Kimmo, and thanks also for being here with us today. Now, if we could jump straight in, I'd like to, I guess first ask a leadoff question, fairly high level, to get things kicked off to both Arthur and Kimmo. As leaders in the global regulatory space, how do you see the role of Suptech in enhancing regulatory oversight and promoting financial stability? And I guess more specifically, how do you believe Suptech can help regulators better monitor risks and prevent or better prepare for financial crisis of the future?
Should I get started?
Go first to Arthur, please.
Yeah, thanks, Philip. First of all, thanks to F&A for asking me to join this discussion session. It's an exciting topic for us because we have spent, as Philip, as you've mentioned, we have been investing heavily in Suptech initiatives in the past 5-6 years. And I think the main reason why we were doing that was because, we have, I'm sure regulators around the world, banking supervisors around the world, central banks around the world have been investing heavily in digitalization initiatives, but particularly so in the digitalization efforts, we find that the supervisory process can actually benefit a lot from the latest technologies that are coming out from the tech world in several aspects, in terms of how do we make our supervision or supervisory efforts more accurate, more clinical? How do we make it more effective? How do we make it more timely and efficient? And how do we make it more forward-looking? I can go into a bit of that later on in the discussions, but mainly we have been, it's nothing new, to be honest, to revolutionize the way we look at supervisory processes. But what has changed in the past 10 years or so was the availability of data. I think with internet, with social media, we now have a much more interconnected data set out there. It's not a question of how much we want banks to submit to us. It's actually how much we go out there and search and sort of grab it into our own data sets and then start all the data analysis. And the data has intrinsic value in them, and so it's just a question of how we derive the value from it. So I think the things that have basically changed the way we look at supervisory processes. In the past, we think of data as something to enable us to do supervision, but now we think that that is foundation. The core value of the whole supervisory process, what determines how efficient and how effective we are in doing the supervisory efforts is how much value we can extract from as much data as we can from that process. So I think the first thing is with a much larger data set, both in terms of structured and unstructured data, if we can make good use of those data sets, then it makes our supervisory process more clinical, more accurate. Like in our case, we have been, as you know, Philip and Kimmo, we have been collecting granular data from large corporates. We have been collecting granular data, transactional level data in terms of residential mortgage lending. And we have been trying very hard to use different ways of slicing and dicing those data sets, combining those with unstructured data out there like social media posts in terms of corporate relationships, for example, or corporate negative news. With all those information, we are trying to make use of the supervisory process or the Suptech initiatives to make sense of those data and then derive early warning signals so that we can actually act on those in a more effective way. So it makes our supervisory efforts more focused, more clinical, and direct. The other thing about Suptech is, of course, we can actually replace a lot of the processes that we normally use our supervisory colleagues to do and replace it with automated processes. Things like voice recording. In our supervisory process in the past, we have to listen to a lot of voice recording. Now, NLP would allow us to translate those recordings into machine-readable files, and then the machine can actually learn to read through those files and then look for possible warning signals. In fact, even while we were teaching the machine about some of the data sets that we have, the machine's already finding out new trends and new signals that might actually implicate problems. Like when a bank staff was selling investment products to customers, if they all of a sudden they keep repeating certain phrases, or they picked up in terms of the speed with which they spoke, or the tones are changed in a particular way, that might actually implicate problems. And if you extend that logic further, that could actually become a real-time sort of monitoring framework for banks. So Suptech is not just making our process more effective, but it's also making banks' risk management, potentially making banks' risk management process more timely and effective. So that's the effectiveness part. We actually deploy our supervisory colleagues into higher value-adding processes by using the machines to do these kind of more repeatable sort of processes. Timeliness of market surveillance. Philip, in the opening remarks, you mentioned about what happened in the past month in terms of market dislocations. Now imagine if we have machine learning or we have an artificial intelligence for machines monitoring market sentiment, monitoring chats in the social media sort of platforms about negative sentiment about banks. What happened to SVB in March? We might actually be able to pick that sentiment up a few hours before it actually hits us. And don't underestimate how much that few hours would mean in terms of the supervisory process. And so I think in terms of timeliness of our supervisory efforts, I think Suptech has a lot of potential as well. And here in Hong Kong, we are also exploring how the HMA can make better use of social media monitoring to sort of enhance the way we supervise banks. Just for a very quick example, a few months ago, there was a BIN attack on some of our banks. BIN meaning bank identification numbers, and the credit cards, the first few numbers also always BIN. The BIN attack means the fraudsters use the first few numbers and then use the computer to generate the remaining credit card numbers. And once they get a hit, they started using the credit card numbers to do online purchase. The bin attack is actually very hard for banks to fend off. But imagine if there are already talks in the social media about possible bin attack, and we pick that up earlier, rather than waiting for the customer to find that there's a problem or the bank to find that there are actually problems going on and then report it to us. We might be able to pick it up half a day earlier and then properly warn the banks or to warn the public about it. So that's another examples of the timeliness elements of it. Finally, I've just finished off with the last bit about the forward-lookingness of our supervisory process. In the past, our supervisory efforts are always backward-looking in a sense because we're relying on backward-looking data sets, but with a much bigger data set with our ability to look for trends and network within those data sets, we should be able to do much more forward-looking supervisory processes. One very clear example is in terms of combining sort of network analytics with more forward-looking capabilities. You've already mentioned mole accounts. Like fraudulent transactions, I think in terms of if we can have a sufficiently large transactional data set, we might be able to pick up early warning signals of potentially problematic fraudulent transactions going through the banking system. And then we can actually alert the law enforcement agencies accordingly, and the banks, of course, and then the customers get alerted earlier as well. And that was more forward-looking aspects of it, rather than waiting for a certain transaction, problematic transaction to go through the system before we pick it up. So I should perhaps stop there.
Thanks very much, Arthur. And I guess maybe just to flag a couple of the points that Arthur made before cutting over to Kimmo. I mean, I think for those of you who are attending here, I would encourage you to to Google or look up HKMA's digitalization program and their granular data reporting program for granular data sets, including derivatives and loans. I think it's quite unique. We believe that HKMA is one of the leading central banks in the industry in this space. So I would flag that as something that participants may want to investigate a bit more or reach out to HKMA and talk about. I'd also flag your comment, Arthur, about people doing higher value work now. I remember a comment that you made to me, maybe it was probably 5 years ago, about when you were talking about the genesis of the digitalization and Suptech programs in HKMA, and one of the drivers of that being not having large numbers of your team working until 9 p.m. at night, doing data manipulation with spreadsheets, et cetera. So I think that's another very important point. And then the last point that I would raise would be, I guess the combination of more timeliness and forward-looking or predictive analytics. I think these are really key things that we see in the industry. So thanks for making those points. Kimmo, can I ask for your views?
I think Arthur already covered a lot of the benefits. Maybe I'll summarize them, but maybe I focus a little bit on the history where Suptech is coming from, and maybe a little bit on the methodologies, the sort of the scientific underpinnings of a lot of the Suptech applications. So Suptech, of course, the roots are in the last financial crisis, when we really didn't have a lot of information or data to evaluate and make decisions about whether to let the Lehman Brothers fail or whether to bail it out. And some of the research I had done, for example, looking at the networks based on Fedwire or payments data, because payments data is something that's always been better available than other types of data sets, was used in congressional hearings to argue that the regulators should have more granular data sets to be able to understand and evaluate risks. This, of course, then sort of pretty much took place in all the countries around the world, that central bank supervisors got more rights to collect more data sets, and many chose to choose more granular data sets, like Arthur already mentioned, sort of transaction level data sets. So we got data sets around loans, around trade repository data to look at OTC derivatives trading, and other types of data sets that became very large and became a huge data challenge, both for the banks, which created this huge RegTech market, which many are more familiar with than Suptech, to be able to sort of comply with regulations and provide data. I think it became a challenge for central banks to store that data. So I think many years in the beginning on this Suptech journey, before it was called Suptech, it was actually spent in putting that data into databases, cleaning it up, evaluating the quality of the data, generating methods, AI methods, so machine learning methods to evaluate the quality of the data automatically, because it was such large amounts of data that it was difficult to do manually. And I think only in the recent years we've started to really be able to take advantage of the data sets and combine them. I think these ideas of combining the supervisory data sets with publicly available data sets or available data sets that are out there. And we did during COVID, we built a G20 monitor where we sort of also highlighted. I think it's still running with a lot of our sort of like dashboards there to look at the different publicly available data sets and to give the impression how these could be then joined with the supervisory data set to get more insight. So now where we're now in Suptech release, I think we're seeing a lot of large scale transformation programs around the world, looking at that systematically different areas of central banking, from supervision to financial stability to financial market infrastructure oversight to fraud, AML, anti-money laundering, and other types of activities that many central banks are involved in, and large sort of institution-wide programs to take advantage of these new data sets for exactly the reasons that Arthur mentioned, for new insights, for automation, to be able to do things at a higher scale, combine structured and unstructured data sets together to get new insights, more timely, faster insights to free up human resources for more higher value work. So what are the methodological underpinnings? I think Arthur mentioned AI, which is of course, like especially now again with ChatGPT and others, much in the spotlight for these large language models. But I think the original reason, or one of the main sort of drivers of Suptech, was also to understand the complex network of interdependencies in the financial system, and that is sort of also why FNA is called Financial Network Analytics. That was why I set up the company 10 years ago to build the technology to map these networks and to understand the systemic risks. So I think network analysis has always been an integral part of any Suptech journey of a central bank or supervisor. I think Arthur also mentioned, I think, something that has become more important lately, which is the fraud aspect and detecting mule accounts, especially because a lot of countries have been introducing faster payment systems, which have become then very popular with the fraudsters. Because everything moves faster, it's more difficult to track it. So you need more technology to sort of fight that game. And a lot of machine learning AI methods actually are sort of applicable there to be able to faster detect fraudulent payments and mule accounts. And maybe the last sort of methodological piece is simulation, or we call them quite often nowadays digital twins. And I think this is really the future. Arthur also mentioned going from backward looking to forward looking. And one way to do that is to do by simulation and do scenario analysis, and being able to look at how different actions would impact the system, evaluate the value of different types of policy responses that you could be taking, or just doing different scenario analysis around different types of stresses, which might be financial stresses on banks or might be cyber attacks on infrastructures. But I think in all of those cases, simulation and building digital twins of the financial system is very important. Maybe that covers it for now. Over to you, Philip.
Well, those were very extensive answers. In fact, you almost covered everything that we wanted to cover in the broadcast in the first question. But I think that, I mean, maybe just to summarize a couple of points that I think were in common across both Arthur and Kimmo's comments. I mean, one was to summarize quickly, you know, all about data. You know, over the last 10 to 12 years, data availability, depth has completely changed since the global financial crisis, and I think that's been a game changer. Secondly, enabling technologies, whether it's AI, machine learning, RPA, network analytics, have grown by leaps and bounds. You know, completely different landscape than we had 10 or 12 years ago as well. And I think it's good because markets that HKMA and its peers around the world are regulating are much faster, much more interconnected. So I think that the enhanced data availability and depth and enabling technologies have, in a way, come just in time for this new world. Now, Arthur and Kimmo, you both already started to talk about some, I guess, specific examples, but I'd be interested to know whether there are other specific examples that you'd like to raise in terms of greater efficiencies, deeper insights, earlier insights, and early warnings in terms of HKMA's digitalization or Suptech program. And then secondly, after we hear from Arthur, other things that you've seen, some specific examples of other central banks around the world. Kimmo. So first, Arthur.
Well, we are actually beginning to roll out actual sort of use case of the tech uses among our staff. In the past few years, it took us quite a bit of time to do two things. First is to make sense of the data sets that we have. A lot of the time we thought, as a banking supervisor, we thought we have lots of data. Yes, indeed, we have lots of data, but the pertinent questions to ask is whether those data are structured in a way that is useful for nowadays supervisory processes. Very often, those data points are actually structured in silo ways, depending on the teams that are creating those data points or collecting those data points from public sources. And those data sets that supervisory authorities or central banks are having might not be fully integrated into what we call a foundation layer, golden source of supervisory information for all supervisory colleagues to tap into. And it takes a lot of efforts to achieve that, more holistic data sets. And then on top of that, you need what we call knowledge management system to store, retrieve, to govern the storage, retrieval, updating, and further accumulation of data points. And don't underestimate the KMS, the knowledge management system challenge that we would face in building that process. But once you get the foundation layer sorted out, we have to move to revamping some of the supervisory processes. I've already mentioned some use cases like streamlining some of the supervisory touch points with the banks, that we don't listen to recordings anymore. We use a machine to listen to it and translate it into processable sort of type of bytes for us to use. And then we are also developing capabilities for our colleagues to look at a large number of corporate data to see whether there are any interconnections amongst corporates, so that we can actually identify at the system level any critical borrowers. And then we apply the same techniques to service providers to look for potential dependencies in terms of operational resilience. So banks are having lots of third-party service providers, but at system level, if you look hard enough by linking up all the data points, doing network analytics, you can actually visualize whether there are any critical service providers there that you need to deal with. So you revamp the supervisory process from a number crunching process into these kind of more focal points of identification type of work. And of course, in that process, you will need to empower the supervisory colleagues with analytical tools. So visualization techniques, the network analytics type of visualization techniques is very helpful. Kimmo talked about simulation as a forward-looking thing. In a stress testing environment, in fact, if you think about it, you can actually use simulation techniques for stress testing purposes in order for it to be more forward-looking. And we are actually developing some of those capabilities in terms of climate risk stress testing. We are doing our second version of climate risk stress test very soon. And we're trying to build that kind of more forward-looking simulation type of processes into the next phase of stress testing for climate risk. And then, of course, in terms of the Muller counts, AML controls, and Kimmo, you talk about fraud. Actually, to be more accurate, the biggest problems I think the world is facing now is online fraud or telephone scams. Very often, the problem with these kind of fraud is that the victims are actually believing that they are doing something genuine rather than being victimized into doing it. And therefore, it's very hard to really pick those out because the customer won't come forth and complain about it until a very late stage. But I suspect that with better network analytics capability by doing transaction level sort of analytics, I do think that there is much better chance of catching those ahead of time. Not probably before some of the problematic transactions went through, but at least after a short while, then you see that something is wrong. The reality is that our payment system is like 10 times, 100 times more efficient than 10 years ago. But then the question is whether our ability to detect and intercept problematic transactions has that sort of gotten better by 100 times. I don't think so. So we do need to leverage on some of these techniques in looking for some of those problems. And I think network analytics would help us in doing that. Early warning signals, I already mentioned sentiment analysis using natural language processing, monitoring of chats in the sentiment in the social media platforms. Those are very useful early warning signals for us as well. So those are some of the analytical sort of directions that we are using. Now, Kimmo, you mentioned ChatGPT. Banks are actually coming to us and ask whether they can use ChatGPT to do some of those work. Well, I have to say that I don't understand ChatGPT technology enough to judge that, but I just told the banks that you can use it in whatever way you want, but if anything goes wrong, I can't possibly go after ChatGPT, right? So I will still go after the bankers.
Well, it's the same proviso as with outsourced activities, I guess, Arthur. You know, ultimately the banks are still accountable for their activities. Well,
outsourced activities, you can still have a service level agreement to apportion the responsibility, but like with ChatGPT, I don't think you can do that.
Correct. Right. Kimmo.
Sure. So I think Philip already flashed a couple of sort of our solutions in the beginning, and of course we try to do solutions that are more in demand. So I think what we see quite a lot now in demand is liquidity monitoring, especially after the Silicon Valley Bank and Credit Suisse, especially doing that from payments data, real-time payments data, understanding and analyzing RTGS or other payments data sources in order to evaluate that, provide early warning, or if not early warning, at least be able to see it in real time happening. I think there's quite a lot of opportunities in general getting more insights from payments. So I think there are problems with payments, making payments, like with the Muller accounts and fraud. There are efficiencies in how payment system can be more efficient, but there's also a lot of information that is available for supervisors and central banks from the bloodline of the economic system, which is the payments. And one of those is liquidity, understanding the liquidity of the financial market participants and changes there, and behavioral analysis that will give some insights about the riskiness of the system in total. I think other monitoring applications like AML CFT monitoring, monitoring for conduct, using social media and structured data sources to understand sentiment of institutions for conduct analysis. I think that's something that is more out there. We did a couple of years ago together with the BIS Innovation Hub Singapore and MAS, the Monetary Authority of Singapore, a project called Ellipse, which was around operationalizing loan data. So I think that's also more and more central bank supervisors have granular loan data sets available, and operationalizing those data sets has become, of course, a priority, because you see the same type of risk concentrations there that you need to understand the systemic risk and stability of the whole system. Maybe last bit I think is around simulation and stress testing. There's also a question in the chat around different examples of how Suptech is used in cybersecurity analysis. So we have quite a number of client cases where we're doing stress testing, and I think Arthur also made stress testing, climate stress testing based on simulation, but we also do quite a lot of provide technology to do stress testing of different type of cyber attacks, especially on critical infrastructures, payment infrastructures, and being able to then proactively, in a way, make those systems safer by looking how different attacks would unfold or different failures would cascade within the system, and then creating these circuit breakers in advance so that the system is able to withstand failures and potential sort of outages of parts of the system. And I think that is also becoming more of a requirement in many countries, also led by the international organizations. It's part of the FSAP programs, the financial sector assessment programs, to be able to stress test your RTGS system and understand how to protect it better. I think that is a sort of maybe a very important piece of analysis in today's environment.
Excellent. So thanks, Arthur and Kimmo. I think there was a bit too much there, actually, probably for me to try to pull it all together in a summary. I suppose one point that I would pick up on that both Arthur and Kimmo hit on is this idea around stress testing of systemic risk from a resilience perspective. This is something we're seeing a huge amount around on a global basis, and I mean, one perhaps initiative that I would point people to have a look at, and there are many others around the world that are similar, is in the United States. There's an organization that's been established called ARC, which is the Analysis and Resilience Center. It used to be called FSARC. It's based between New York and Washington, D.C., and it's a public-private partnership initiative. So all of the large banks, the US Treasury, the Fed, as well as the large market infrastructures are all members of this and are contributing data, contributing ideas. And right now, in fact, there's a large exercise for the second half of the year around Fedwire stress testing, so the high value payment system in the US. Arthur, you had also mentioned around stress testing operational resilience in a Hong Kong context as well. So I think this is something we're seeing pretty much everywhere in the world, and another kind of broader application of big picture Suptech.
And actually, Philip, I see that a lot of the questions that are being raised in the Q&A box are related to cybersecurity. Yeah. Maybe I want to inject here comments in relation to cybersecurity. First of all, when we talk about Suptech, we're talking about how to actually use technology to enhance supervisory processes. One possible interface between technology and cybersecurity is how do we actually make use of things like AIs to help us in, I think Kim already mentioned that briefly earlier, can an AI engine sort of do penetration testing in a more tricky way than a human can do. And so we are actually seeing that banks are developing capabilities using AIs to challenge their own governance process, to challenge the cyber governance process, and also to do penetration testing sometimes. And so I think that is one areas of possible interface. But when we talk about Suptech, normally we are talking about the supervisory process. I think when it comes to cybersecurity, it's more an interface between ourselves as banking supervisors and the banks. And so it's more like a RegTech space, it's a wider sort of concept. I do think that another possible aspect I should mention is that when we embark upon this Suptech journey, it actually created a much wider possible surface for cyber attacks at the banking supervisors level. So I think supervisors should be very careful with the cybersecurity elements of the whole Suptech journey. When we ask banks to do their own assessment of their potential risk level and then map their own sophistication level in cyber defense capabilities, we should actually do the same once we have these kind of Suptech initiatives done in the supervisory space. So we should actually measure ourselves using the same benchmark as we are measuring banks in terms of cybersecurity capacity. And the most worrying thing, if you ask me from my perspective in terms of cybersecurity, is not actually just cyber attack on the operational aspects of a bank. It's actually on data integrity of the bank. If a bank's system's down, they can try to, well, after a while, if they do this operational resilience program properly, they should be able to bring the core elements up and running after a short period of time. But the banks can never operate properly without 100% confidence in accuracy of the data sets. And therefore, I think while we are collating more data at the supervisory level, the same would apply if we are beginning to have doubts on the accuracy of the data that we've collected, then the supervisory process cannot go on. And therefore, I think data resilience and data integrity consideration would be paramount to forward because we're depending so much on data again. So I just want to interject those few points.
Okay. Well, actually, thank you, Arthur, for kind of switching over into some of the audience attendee Q&A. I think we've got a lot of good questions here, and so I'm actually gonna cut over to audience Q&A a bit earlier because I think you've already started to address some of the cyber related questions that we have up here. So I'll go to this rather than kind of my prepared questions. I guess first, Kimmo, if you have a look at the the cyber related questions there, there was one that was directed to you around how the concept of a digital twin or replica and simulation can be applied in Suptech to enhance financial institutions' ability to both detect and respond to cyber threats in an efficient and effective manner.
Yeah, I think that's an excellent question. And maybe I talk a little bit about what are digital twins in this concept. So we talked about simulation and digital twins a little bit interchangeably, but I think there's a little bit of a difference. Simulation can be based on a model, but the way that at least we understand these digital twins is that they're actual replicas, very accurate like copies of the operational infrastructure. So for example, we've worked with the Bank of England to create the digital twin of the CHAPS system. So the CHAPS system that operates in our software operates exactly the same with the same inputs. It provides the same outputs. So it's in a way a copy of the real system. And then when you have this copy of the real system, you can of course, start to use it for different types of purposes. The Bank of England used it for optimizing the new CHAPS system. So when the new CHAPS will go live, it will have a better liquidity saving mechanisms, which were designed with this digital twin by running lots of different types of scenario analysis, how different types of operational rules would and liquidity saving mechanisms would affect the bank's liquidity. But then at the same time, because you have this twin of it, you can also start to do different type of stress testing, like to de-optimize the system. What would happen if like certain banks don't have access to enough liquidity? What would happen if they can't make payments? What would happen if different types of operational scenarios around cyber attacks? We have other clients where we're looking at rewiring how everything would be done differently in the case of a attack. So that's one thing. You can do the scenario analysis, but I think the other thing with these digital twins is that you can actually have them run in parallel, and then you can start to compare how does the twin perform compared to the real system. So if the twin starts to, or the real system starts to deviate from the twin, then something is going on that is unexpected, because you would have expected it to run differently. So these twins can also be then used to detect maybe there were some changes in the system, maybe there were changes in the data, maybe those were caused by patches, maybe they were caused by attacks, maybe they were caused by random errors, but at least we have sort of a benchmark running in parallel that we know should be right. So I think there's lots of opportunities for these digital twins in the detection and in the different scenario analysis and getting more prepared. I think there's a principle that sometimes the cyber attacks will always go through. So what will happen then? So is that there's a prevention, but there's also this proactive work of securing the system to be able to recover quicker from an attacker.
Okay. Can I cut over to an entirely different question? I'd like to direct this question to Arthur. So it's from Gordon Wong, who's with the PRA here in the UK. And Gordon says, Arthur, so good to see you again in this very interesting session. Can I get a sense from you in terms of whether you think there's any work that could be done on the international level to facilitate Suptech adoption and address common challenges that are arising from it?
Yeah, thanks, Philip. Hi, Gordon. I think you are the Gordon that I think who you are. So good to see you here. Although I don't actually get to see your face. International level, I think the challenge that we face in terms of international, in the international dimension, is that different supervisors or banking supervisors start this journey at different times, and they have different focuses. And so it's sometimes the language that we use in terms of Suptech journey is very different, and it's quite hard to coordinate things sometimes. But if you ask me, I think there are several things that can be done. First of all, let me say this, the BIS has a working group in promoting Suptech use cases, and we are a very active member of that working group. So we would use that working group to compare notes on experiences, on challenges that we've seen or came across in terms of implementing certain Suptech solutions. And then we can actually share those experiences so that we don't have to reinvent the wheels every time the supervisors actually embark upon that. I think those needs to be substantially enhanced. And to be honest, I think some regional groupings should also start engaging in those kind of dialogue as well. Like in Asia, we have this EMEA settings of 10 central banks in the region with supervisory authorities talking to each other. And we even have a working group with banking supervision, and we should actually use those platforms more effectively. Now, apart from experience sharing, I would say that there are certain issues that needs better cross-border dialogue. I'm putting on my hat as Basel Committee members and a co-chair of the Policy and Standards Group. The Basel Committee always encourage more effective cross-border supervisory efforts and coordination. And therefore, when it comes to these kind of Suptech, because each supervisory authorities, when they embark upon the Suptech journey, they're trying to enhance the speed with which they can actually identify problems or risk trends. If we can actually communicate better across different jurisdictions based on the outcome of these kind of Suptech analytical engines, I think that would be helpful. A clear example would go back to the bin attack example. The bin attack didn't start in Hong Kong on that occasion. It started somewhere else. I think Hong Kong was the second market that those fraudsters targeted. And it didn't stop in Hong Kong. It actually moved on to some other markets in the region about a day or two later. Now, if we can actually build engines that could actually help us in identifying those that particular bin attack incident a few hours earlier, we have a head start of a better start of a few hours. But imagine if we start alerting our peers, our major peers, both regionally or globally, about that, then they might actually get a day or two's head start in terms of work that they can done in avoiding any problems. So I do think that when it comes to international engagement, it was actually how do we actually better share these kind of insights arising from our Suptech engines that would be very helpful.
Excellent. I don't know, Kimmo, did you have anything to add on there? I mean, I think actually these two guests we have today, I think are the right people. I mean, Arthur's been a long time Basel Committee member. Kimmo, you've been very active, with both a lot of individual central banks as well as more recently with the various BIS innovation hubs, which I think are kind of key connectors in the Suptech space. But do you have a few points?
Yeah, maybe in a way, like I think both. Maybe I can sort of talk about the same things as Arthur did. So we've done over 100 projects with central banks and FMIs over the last decade. So a lot of the engagements we actually have with these institutions is sharing use cases because it takes quite a bit of time to deploy a technology to solve a problem. So having technology and having the data is one thing, but deploying that technology to solve a problem is actually quite a long-winded journey as well. And if some central bank has already gone through that and solved the problem with technology and data, I think others can get a very good head start by, in a way, doing the same thing, because the same things are of interest mostly to central banks. So a lot of the conversations we have with central bank supervisors and others are around showing, okay, how is our technology being deployed elsewhere, and what are the benefits of that? So that the sharing is important. For this cross-border payments bit, I think we'll have a large problem because we have this faster payment system that created this ability to do the layering bit of the money laundering very quickly, and new forms of fraud and scams that are utilizing this system domestically already, and that's in a way not been addressed. But recently there's been large amount of cross-border faster payment schemes being introduced, and when the fraud goes cross-border, I think it gets even more difficult to track and stop. So I think these methods from anomaly detection and machine learning and network analytics become very important. Where we are sort of adding in that space is being able to build the graph of these payment transactions, who is paying who, and update it in real time. And then be able to calculate the graph features of that data, so that those graph features can be used in the anomaly detection models, which makes them much more accurate than using only information around the sender and the receiver that is mostly done in these fraud detection systems today. So I think that will be an important sort of area where we're working with a few payment systems today.
So before, I guess before asking a closing question, which is I think a very good one from one of our guests, from one of our attendees here today, I'd like to pick up personally just a quick question from one of our attendees, which I'll take just to keep it very brief, from Fareed Hawadar, who said, "I'd be keen to understand very briefly Suptech use cases that perhaps F&A is not focused on today." I think that's a good question. We'd like to address it. So the answer is there are lots of Suptech use cases that F&A is not focused on. I guess one that's not necessarily a use case is there's a huge amount of Suptech innovation and implementation in the area of data collection, data management, both from the perspective of the data repositories that would sit in an HKMA or an MAS or a Fed or a PRA, but also in terms of the connectivity, be that push or pull connectivity with the banks and other financial institutions. So that's a space where there's an enormous amount going on around. F&A doesn't play in that data collection and data management space, and I think that's something to highlight. There are also a lot of capital markets related use cases around trade surveillance, around broker supervision, and other areas. These are areas that F&A's technology is applicable, but we don't focus in these areas right now. They're very good providers in those spaces. Most of the use cases around what's called conduct risk. In my introduction to Arthur, you said that you saw that Arthur is also responsible for banking conduct. So areas like sales practices as well. It's a lot of good Suptech applications in that space that F&A doesn't deploy in, and most work around anti-money laundering as well. This is a big focus for some central banks. More of the large market infrastructures actually are getting more interested in AML, and historically F&A hasn't done that much in that space, but it's a hot area right now. So thanks very much for that question, Fareed. Then just to close off, I'd like to ask for a kind of a quick answer from both Arthur and Kimmo. We have a question from one of our attendees, Liam Clark, who said, I think this is a good closing question. He says, banks and regulators are digitalizing. What do you think are the key similarities and differences in the applications and issues between the two? So first to Arthur.
Well, I don't see a lot of differences in terms of the a lot of things that we're exploring in the Suptech phase would equally be useful for banks in terms of the risk management space. And therefore, I do see that some of the analytical engines that we are developing and using and collating unstructured data out there, for example, in helping us understand sentiment, in helping us to be more forward-looking in terms of the risk emergence or emerging from the markets. I think those are actually very similar in terms of the applications that we are exploring. So we'll both be looking at AI analytical engines. We'll both be using machine learning to pick out problematic cases. We'll all be using network analytic tools to identify, to extract the hidden data value from large data sets, which I mentioned as the first sort of foundational sort of consideration in any Suptech projects. So I think those are very similar. I guess what's different, the major differences between ourselves and the financial institutions doing their digitalization process is that banks are always trying to balance costs and benefits. I'm not saying that we banking supervisors do not care about costs. We do care about costs. But we are in the business of actually looking for problems. So if there are ways of enhancing the way we look for potential problems, then no matter how much it costs, I think it's still worth it. But for banks, that may not be the case. So I think if you ask me, I think very often in the supervisory process, we need to give recognition to these initiatives. how do we actually convince banks that if they embark upon a technological innovative journeys, they would actually get some benefits out of it, in terms of like seeing less of the supervisory authorities sort of being upon the back all the time, looking at things like operational resilience and risk management practices. So if we are comfortable with certain digitalization projects, we have to give the banks some recognition so that they can actually make the cost-benefit analysis easier for the banks to swallow. I'm not sure whether I've addressed that question. It's a very tough question to address.
I think you did very well. I think you did very well, Arthur. Thank you. Any quick final points to add, Kimmo?
Yeah, so just one point. So I agree with Arthur that the differences, especially in the questions and the methodologies, are not very big. There's, however, one very big difference is that the central banks / supervisors have usually all the data available for the whole economy, while the banks only have access to their own data. So I think the big question forward is, and a lot of the decision making requires to have all the data around fraud detection, around liquidity, around systemic risks. You can only evaluate those when you understand the whole system. So and you can make good decisions about those when you understand the whole system and be able to model it. So how in the future can we enable the banks also to, in a way, have access to the full data so that they can make better decisions?
Excellent. Well, I think that's a great way to close. We went a couple of minutes over, so I'd just like to thank everybody for attending. I'd particularly like to thank Arthur for being an excellent panelist today. Also to Kimmo, thank you. I think our team has put here in the chat a number of different papers that you may want to have a look at, follow up on, as well as some links to future broadcasts, etc. I think our team had flashed up some of the May content that we have, so please look out both for our Suptech broadcasts over the coming months, as well as our other content. So we'll close here, and thank you. Have a good afternoon or evening if you're in Asia, and a good morning. Kimmo is actually in New York today, so a good morning today.
Morning.
Good day, everybody. Thank you very much.
Started to be mornings.
Thanks, Philip. Thank you very much.
Bye-bye.